Welcome back to Yahoo Finance Live, continuing our exclusive coverage from DoubleLine's Investor Days out in Los Angeles. Want to send things back over to Yahoo Finance's Julia LaRoche, who has the latest interview in our series. Julia?
Well, thank you so much, Zach, and it is great to be here at DoubleLine Capital. I'm joined now by Valerie Ho, who is a portfolio manager looking after international fixed income. So emerging markets, a lot going on there these days. And let's talk about here in the U.S., we got the CPI print this morning. And, you know, what are the impacts that you could see inflation having across emerging markets?
Sure, that's a great question, and great to be here today. Thanks for being here. Certainly, we got a big surprise on the inflation print today, 4.2% on a year-over-year basis on the headline number. Core inflation also much higher. When you look under the hood, I think you can, sort of point to the aggregate supply and demand imbalances leading to higher prices. So for temporary things like, higher use car prices, airlines, hotels and reopenings. And the big question will be whether the Fed maintains this track that this is going to be transitory. And we're going to get a host of Fed speakers. And I think it'll be very important to watch the narrative, whether that starts to pull forward the discussion of taper or not. Now, if it does, the impact on emerging market is clearly the faster pace of normalization and how that would tighten financial conditions for these emerging markets. In 2020, we saw a synchronized downturn in economic activity. So we saw developed markets and emerging markets, central banks and fiscal policy become highly expansionary. But 2021 is going to be a multi-stage differentiated recovery, meaning that, the U.S., China, Europe is coming out of this much quicker than emerging markets. So there isn't a full recovery in emerging markets yet. So a faster pace of normalization in the United States is going to have rippling effects onto emerging markets. And by the way, emerging markets are also dealing with their own inflation problems. So yes, there's the base effects going on. You're also seeing a decent amount of FX pass-through impacting inflation as well. Food is a much larger percentage of emerging market CPI basket. So you're seeing inflation pressures as well, and that's also pushing forward the normalization process. We've already seen hikes out of emerging market countries such as Brazil and Russia, and how would that normalization start to weigh on growth in emerging markets? It remains to be seen.
Well, there's a lot to unpack within there. So, let's talk about the economic scarring from the pandemic and the long-term impacts that we might see emerge across EM. What are the things that you'll be most focused on as it relates to that?
Yeah, that's a great question. I think one thing that we're really going to be focused on is how has this pandemic affected productivity? So with the buildup of debt and deficits across emerging markets and as well as developed markets, at some point we're going to have to see a fiscal consolidation. So this post-crisis fiscal consolidation is going to lead to a protracted period of lower investment. There's also the issues of reorientation of supply chain, so supply chain bottlenecks. And I think a lot of companies, a lot of governments are looking to bring back that overseas production to its domestic market. And that could be be something that's going to weigh on productivity. There's issues with long-term structural unemployment. So businesses have closed permanently during the pandemic. They're not reopening. And the ones that have survived likely means that they pull forward a lot of that technology and automation. So those jobs may not be coming back. And there's certainly it's going to take a while to work out that, structural unemployment issue with supply and demand of labor. And then on the flip side, I think it's the social issues. So this pandemic has been unequitable in terms of its impact on various income levels of countries and even the income groups within its own country. So it's been harsh on minorities, women's, youth, the vulnerable populations. It has pushed millions, 50 to 60 million people by World Bank estimates into extreme poverty across the globe. And it certainly has highlighted the deficits in terms of government spending in things like healthcare and social safety nets. And I think the social unrest that may occur for the demand of higher services is going to have long-lasting implications on politics, on macroeconomic policy, on fiscal policy going forward.
Well, speaking of the fiscal policy side of things, how much space is there left when it comes to that for EM?
I think that there's various degrees of fiscal space depending on which emerging market countries you're looking at. Certain countries entered the pandemic with a lot more fiscal space. So the Chiles and the Perus of the world had large amounts of fiscal savings. They drew that down. They have a lot more room to work with. And then you start thinking about the South Africas and the Brazils of the world. And right now, I think there's a big debate whether Brazil is actually going to lose its fiscal anchor, because there is that demand for services and spending outside of the budget for social transfers and fiscal transfers that are really actually needed at this juncture, given that the pandemic isn't under control and there isn't the fiscal space there for them right now.
Mm-hmm. And when we think about emerging markets, you often think about commodities. So commodity prices have been surging, but why is it that the risk assets in EM commodities producing countries have been lagging that commodities rally?
Yeah, so typically when you see a commodity rally like this, it is a sign point for global reflation, and typically it really benefits emerging markets and emerging market commodity producing countries. We haven't seen that this round, and this isn't any normal recovery that we're seeing by any stretch or means. So one, you have just the headwinds of fundamentals. So debts and deficits are much worse in countries. So two, you have the pandemic that's still not entirely under control. New variants are emerging and a slower pace of vaccinations across emerging markets. And the third, I think, are the idiosyncratic events that we're seeing in the country. So big commodity producers, big oil producers like Colombia, Peru, who has high ties to copper and mining, Russia, with obviously big ties to oil and gas. They've actually been lagging the rally, and one of the worst performers within the JP Morgan MB index. And I think a big reason for that are the idiosyncratic country factors on the ground. So in Peru, there's a big election that's going to happen in June. This is a runoff election. One of the candidates who's currently leading in the polls is a extreme left-wing candidate who, if he is elected, is going to be a stark change from the orthodox macroeconomic policy that we're used to seeing in the country. So it's very, very binary. That's been weighing on asset prices. In Colombia, we've had 2 weeks of protests over a tax reform bill that the country has submitted. And that tax reform is needed for the country to maintain its investment grade status. So the government's in a difficult place. So I think these country factors are weighing a lot and not enjoying the benefit of the commodity rally that they normally would.
So we have about 60 seconds. What would you say would be the biggest risk that's going to be on your radar across EM?
It's still the pandemic for me. It's still the evolution of vaccines and the variants. There's a huge amount of vaccine inadequacy in emerging markets. The pace is just too slow right now. And the longer that it takes to get those vaccines deployed means that there's a greater chance for variants to start circulating, for them to be more contagious. And as we mentioned before, there isn't the fiscal space to counteract, this forever. So we need to get populations vaccinated, and that's what we're going to be watching first and foremost.
Valerie Ho, Portfolio Manager for DoubleLines International Fixed Income. I thank you so much for your time, and we're so grateful to be here. Also, we're looking forward to our conversation tomorrow with DoubleLines founder and CEO Jeffrey Gundlach. We'll have more all day from DoubleLines headquarters. I'm going to send it back to Akiko. Akiko?